To introduce Mortgage Peer Network, please welcome the Mayor of North Little Rock, the Honorable Joe Smith.
Thank you. You know, it's certainly an honor to be here for this inaugural event, and I was pleased that the governor wanted a show of hands on how many people were from out of town. So on behalf of Central Arkansas and the city of North Little Rock, we certainly want to say welcome to you. If you need anything while you're here, we'll certainly roll out the red carpet for you. Mark will do the same thing on his side of the river. We'll do whatever we can do. I think we can fix most anything except DWIs. So don't get a DWI. I'm out. I'm not taking your call. So, but anyway, it's an honor to be here, and I'm certainly pleased to introduce a company that is headquartered in North Little Rock, Mortgage Peer Network. You know, as mayors, you know, we realize it's our job to help small businesses grow. And when we have startups like this, that really excites us because we can see the potential. And certainly Mortgage Peer Network, who was founded by Greg Ellis and Dave Dempster. You know, Greg in the 90s founded another mortgage technology firm in North Little Rock. He's got clients currently all over the country. You know, I've looked at his ideas and his thoughts, and you know, it's certainly going to be a valuable tool for mortgage lenders and home buyers throughout the United States. You know, all the way from the other side of the river, may I introduce to you Greg Ellis, CEO and founder of Mortgage Peer Network. Thank you all very much.
Thank you, Mayor Smith. Welcome to this presentation this afternoon. Appreciate everybody coming out today. As Mayor Smith said, I'm Greg Ellis with Mortgage Peer Network, and I am the CEO. Co-founder is Dave Dempster from Charleston, South Carolina. Personally, I've been in the mortgage banking business for about 27 years, most of it right here in the Central Arkansas area. Part of that was with a firm, First Commercial Mortgage. Anybody remember that? You don't have to show your age if you don't want to. As Mayor Smith mentioned, I've started another company in the 90s, also targeting the mortgage banking industry. Got an extensive technical background, software development background, and Dave has over 30 years of proven executive leadership. Dave and I have worked together in some form or fashion, whether I was a customer of his, worked for his company, or working together for over 20 years, since I guess 1997. We have seen about everything that there is to see in the mortgage banking industry. And one of the things that we see today is a big problem. And the problem is the cost of compliance on our mortgage origination companies. Nobody can argue with the numbers. Looking at information provided by the Mortgage Bankers Association of America, the efficiency in our industry has dropped through the floor. If you look at just the number of loan applications per underwriting resource, it's dropped from an average of 150 files down to about 35. That's a terrible decrease in efficiency. And then looking at the all-in, fully loaded cost of origination, the cost to most mortgage bankers to originate a file has gone from $5,100 to nearly $7,000. That's a huge increase in expense. Additionally, it's impacting customer experience. And I want to share a quick story with you. This is Katie and Tanner. They live in Rogers, Arkansas. Katie and Tanner have been married just over 1 year. I've known her whole life. Okay, her and Tanner both just graduated last year with degrees from OSU and U of A. They have professional jobs. And May 25th of this year, Katie and Tanner bought the house that you see behind them. As you can imagine, a first-time home buyer, first time to get a mortgage, they were very nervous, a little bit stressed out, as most consumers are. And she called me at every step of the way. Hey, Greg, this guy's telling me this. Is this really true? Yeah, that's true. Hey, Greg, I've got this disclosure. Can you help me understand it? Sure, it's fine. It's easy. But she was gaining confidence in her loan officer every step of the way until the Friday before closing when she got a closing disclosure, which is a new document required by our RESPA and TRID regulations that have been changed recently. She didn't understand the numbers. She called her loan officer up 4:20 on Friday afternoon and says, I don't understand this, and this guy, he's making all this money, he won't answer my questions. He said, don't worry about it, Katie, just show up to closing and sign the papers, it'll be okay, trust me. Well, after she sent the documents down to me and I took a look at them and explained to her the simple difference between borrower cash to close and closing cost, she was okay. But I can tell you right now, she wasn't okay with her lender. At that point, that lender had done the job of closing the loan, but had failed to provide the sort of borrower experience that's going to result in that couple going back to that lender for a refinance loan, for a move-up loan when they get a new house, or to buy a boat, or finance a ranch, or whatever it is they want to do. This lender has lost all that future potential revenue. So, let me tell you how Mortgage Peer Network could have saved this situation for that lender. First of all, we are a cloud-based solution, and we help lenders increase revenue in two ways. First of all, we help them provide an excellent borrower experience and increase likelihood of cross-sell and repeat business. We do this by providing step-by-step, milestone-based customer feedback. That Friday afternoon, some manager would have been notified, hey, Katie is not happy. Somebody needs to call her and get her back on track. We need to salvage this relationship. Okay, secondly, those customers that are happy, our system provides them a very easy way that they can share about their lender and their experience on social networks like Twitter and LinkedIn and others. All right, driving more referral business back to the lender. Secondly, we help lenders reduce expense. We do this by providing peer-based performance analytics. Every lender on the Mortgage Peer Network can compare their operational efficiency to all the other lenders on the network. You don't have to guess what's the optimal number of files per processor or underwriter. You know what? We can give you hard evidence to say this is probably where you should be targeting your operations and identify places for process improvement and to gain efficiencies in your organization. Just looking at some of the estimates that we've put together, if we can take our technology and help a lender, a pretty average size lender, increase efficiency by a half a unit a day, a half a loan unit a day, we feel like we can provide over $240,000 a year in savings. What gets me excited, being an ex-mortgage banker, is revenue. That's what I like. Looking at the revenue that can be generated from our referral business and customer satisfaction feedback, if we can get you a 5% referral rate on your existing book of business, it's going to generate over $340,000 of additional revenue. That combined with the cost savings is significant. It's something these lenders need to stay competitive and continue to provide the liquidity that the U.S. homebuyer market needs today. The U.S. market for mortgages is big. This year alone, it's expected to originate $1.6 trillion in loans. That's going to be originated by about 16,000 different companies, according to the National Mortgage Licensing System. And we feel a 5% penetration into this market could earn us about a $21 million a year annual recurring revenue. Well, this is a great time for Mortgage Peer Network and a solution like this. There are several reasons. First, the CFPB, or the Consumer Financial Protection Bureau, other people give it different names for each of those letters, but those are lenders and we can't say those because we're, in public. The regulatory changes coming down are absolutely impacting the industry. These changes are impacting processes. Processes have to get changed. That typically impacts customer service and doesn't come out with the best deal for the customer. Secondly, hosted loan origination systems are the mainstream nowadays. 5-10 years ago, we would have had to integrate it with 1,000 different companies to get the kind of data we need. Today, we can go to 4 and get most of the data we need because all of these systems that people use to originate mortgages, they're all hosted in the cloud, so we don't have to go everywhere all over the world. We can just go to those 4 people and get the data we need. And lastly, the prevalence of social media in our world today is becoming core to lenders' digital strategy. But listen, guys, don't take my word for it, and I promise we did not pay Fannie Mae to do this. Last week, Fannie Mae released their Mortgage Lender Sentiment Survey. In this survey, they asked lenders a couple of questions. Where would you like to invest capital if you had capital to invest in your operations? And what would be the goal of that? This is the results. The majority of the lenders said, we want to invest in origination, the part of the process where we're taking the application from the customer. All right, that's great. In that area, what is your main goal for investing in that? As you can see right here, it was twofold. We want to improve our customer experience, and we want to get better at what we do. We want to improve our processes. We didn't make this up. You can go download it off the internet and read it for yourself. So lenders today really are kind of forced to deal with this in a hodgepodge manner. They use commercial CRM solutions. They use business intelligence solutions. They use homemade solutions, but none of these are able to check off all of the boxes that Mortgage Peer Network can check off. Looking at the product today, the best thing I can tell you about the product today, it's 100% development complete. We're in production, we're hosted in the Microsoft Azure network, and we are a 100% Microsoft tech stack. I want to walk you through the process just a moment and show you how this works. First of all, at every major milestone in the process, we're in constant communication with your customer. This communication goes out in an effort to get that feedback, but what we do is we allow the lender to put in cross-sell messaging and other marketing information to draw the consumer in. We can put current loan information in there as well. We take that feedback from that customer, we take that peer-based performance information that we've got across the network, and we're able to give the lender the ability to improve efficiency, provide a better customer experience, and get that real-time complaint resolution to save those customer experiences. All right, those customers that are super happy with the service they're getting, we give them a really easy way to click a little button and boom, it just creates a tweet for them and it goes out and tells all their friends and family about what a wonderful job their lender's doing for them. We make money a couple of different ways. We charge membership fees on a per user basis. We also collect a transaction fee at a loan level for the survey system. Average client value is about $38,000 and average client acquisition cost about $2,500. We have in the past developed partnerships with other technology firms for sales and distribution through our existing company. We've currently executed agreements with 2 of these vendors that you see here today, currently working on 2 more. And this gives us instant scalability. It gives us the opportunity to co-market and do joint sales efforts with these companies and leverage their existing infrastructure. It's a proven, successful method of distribution. Our financial performance is great. By year 2, we'll be profitable. By year 5, we hope to hit that $20 million mark. And to date, we've signed up a couple of great accounts. The very first premier member of Mortgage Peer Network was Bank of England Mortgage right here in Central Arkansas. They operate in over 42 states. They close about 12,000 units a year. Then the next day, we closed Flagship Financial in Lehi, Utah, the largest originator of VA mortgages in the country. All right, we were hoping to get a signal from the back of the room with an email closing a third marquee account that would actually do more business than these 2 companies combined. I don't see the hand waving in the back, so we haven't gotten the email yet. We're here today trying to raise $500,000 in investment to help us get to where we want to go. As you can see, we're focused on hiring sales and marketing. The product is already complete, so we don't have a lot of product development in front of us. We just need to get out and take this to market. Our goal is to make sure the next time Katie and Tanner go out to get a loan, they have the kind of experience that develops the kind of relationship that is going to drive them back to that lender again and again. I'm Greg Ellis with Mortgage Peer Network, and I appreciate everything you're doing for us today.